They say every market has a rhythm. But in Japan, there was once a code, a forbidden pattern, a whisper so powerful that traders passed it in silence, like a torch only the worthy could carry. They called it the strategy that never loses. Imagine this. You're watching the market bleed red. Traders panic, screens flash, accounts burn. Everyone's drowning. Yet one man sits calm, almost smiling. His chart shows the same chaos as yours, but his hands don't shake. Because he isn't reacting, he already knows what comes next. That's the code. Not luck, not magic. A discipline so sharp it cut through noise like a blade through silk. Most traders? They chase signals. They worship indicators. They pray to luck. And every time, the market chews them alive. But the Japanese masters saw through the illusion. They didn't just see candles. They saw human psychology carved into every wick and body. Fear, greed, hesitation, manipulation. Every chart became a battlefield. Every candle a soldier. And if you could read them correctly, you could predict who would fall and who would win. That's why this secret became feared. It wasn't a tool, it was a weapon. And once you mastered it, you didn't just trade, you dominated. But here's the truth most won't tell you. The strategy that never loses doesn't mean you'll never see red. It means the market can't break you. It means your discipline is unshakable. Your edge, undeniable. Your wins compound while others crumble. It's the line between chaos and clarity, between gambler and master, between losing everything and building something that lasts. For years, this code has been hidden in plain sight. Traders argue about it in forums, copy fragments of it into their systems, yet almost no one truly understands it. Because it isn't just about patterns, it's about patience. It isn't just about signals, it's about silence. And once you learn it, you can never unsee it. This is why the whispers never die. This is why they call it the Japanese code of trading. And this is the beginning of the secret that never loses. In every culture, mastery has its guardians. In Japan, that guardian was the trader who carried the mindset of a samurai into the marketplace. He wasn't chasing every move. He wasn't gambling with emotion. His presence was calm, his discipline razor sharp. Where others rushed to attack, he waited. Where others panicked and lost, he breathed. This mindset wasn't just trading, it was combat, waged in silence. And from this discipline was born a way of seeing the market that the rest of the world could not yet imagine. That way of seeing became the candlestick chart. To most, price is just a number moving up or down. But for the Japanese master, price was a language. Every open, every close, every shadow became a word. Put them together, and they spoke volumes. A hammer candle wasn't random. It revealed exhaustion. A doji wasn't noise. It revealed hesitation. An engulfing bar wasn't chance. It revealed domination. This was not simply drawing candles. It was decoding the psychology behind them. The brilliance of candlesticks lay in their simplicity. One glance, and you could see the entire battle between buyers and sellers. No messy equations, no complicated formulas, just pure human emotion painted in red and green. Fear stretched out in long wicks. Greed filled fat, powerful bodies. Indecision shrank candles into whispers. What others saw as shapes, the Japanese master saw as secrets. And secrets, once understood, became advantage. But the secret wasn't the chart alone. It was the discipline behind it. The Japanese trader knew that candles without patience were useless. You could memorize every pattern, every reversal signal, but without the samurai's calm, you would still fail. Discipline meant waiting through silence, striking only when the signal was undeniable. It meant walking away from battles you couldn't win. It meant protecting capital the way a warrior protects his blade. Because without your blade, you cannot fight again. And without your capital, you cannot trade again. This is why Japanese traders were feared. They didn't enter the market to gamble. They entered with purpose. While others were lured by greed, they sharpened their focus. While others drowned in noise, they listened to clarity. Traders from across the world watched in disbelief as Japanese masters took positions with precision and exited before chaos hit. It felt almost supernatural, but it wasn't magic. It was discipline disguised as destiny. Fear spreads quickly in markets. One sharp drop and the crowd stampedes. Greed blinds even faster. One rally and traders throw their rules away. But the Japanese master was immune. His strength wasn't prediction, it was control. He did not fight the storm. He read it, timed it, and moved in harmony with it. This is what set him apart. While others fought against waves, he surfed them. And when you master that, the market bends, not because you force it, but because you've aligned with its rhythm. The legend isn't just about who created candlestick charts or how they were drawn. It's about what they represented, the marriage of psychology and discipline. The market is not numbers, it's people. And people are fear, greed, hope, and doubt wrapped in patterns. The Japanese code revealed that truth. That's why it survived. That's why it spread. And that's why even today, centuries later, candlestick charts remain the universal language of trading. Behind every candle is not just data. It's the echo of the samurai's mindset. And once you see it, you can never trade blindly again. The market doesn't reward the loudest trader. It doesn't reward the fastest click or the one who fills their chart with the most indicators. It rewards the one who can wait, the one who sees without rushing, the one who has the strength to sit still when everyone else is panicking. This is the first line of the Japanese code. Patience is power, because the market is designed to tempt you into bad trades, to pull you into emotional traps. And patience is the shield that protects you. Without it, you're already lost. But patience alone isn't enough. A warrior doesn't just wait. He observes. He studies the enemy's movements, notices every twitch, every hesitation. The Japanese trader did the same. Every candle became a clue. Every formation a message. Not rushing, not guessing, just observing until the truth revealed itself. Where others saw chaos, he saw patterns. Where others saw noise, he heard rhythm. And that's why he could strike at the exact moment others froze. At the heart of this code lies discipline. Discipline to cut losses quickly. Discipline to walk away from setups that don't fit. Discipline to follow the plan even when greed whispers in your ear. To the samurai, honor was everything. To the Japanese trader, discipline was honor. It meant refusing to betray your edge for a quick thrill. It meant protecting your account with the same seriousness a warrior protected his blade. Because once your blade dulls, you cannot fight again. And once your capital is gone, you cannot trade again. This is where the symbolism of the samurai becomes more than history. It becomes psychology. The samurai would rather die with honor than live with shame. In trading, that translates to choosing discipline over greed, process over impulse. A true trader doesn't chase every move. He doesn't betray his plan for the rush of just one more trade. Honor means sticking to your rules, even when the market taunts you with shortcuts. The Japanese masters understood. A trade without honor is worse than no trade at all. Now here's where the God-level principle emerges. Candlestick charts weren't just pictures. They were reflections of collective human emotion. Every long wick showed fear stretching beyond reason. Every engulfing body revealed greed, swallowing hesitation. Each candle became a mirror of psychology. And the principle was simple yet profound. If you can read human behavior, you can read the market. The chart wasn't about numbers. It was about people. This was the hidden truth, and once you saw it, you never looked at a candle the same way again. But this principle demanded more than knowledge. It demanded control. Because seeing fear and greed is one thing. Not joining them is another. The market is a battlefield of emotions. Most traders are victims of it. They buy when they should wait. They sell when they should hold. They panic when they should breathe. The Japanese code trains you to stand apart, to see the wave of fear crash and remain unmoved, to watch greed explode and remain patient. That is the difference between gambler and master, between follower and leader, between loser and legend. This is the secret code, not a magical indicator, not a formula that prints money, but a mindset that transforms every chart you read in every trade you take. Patience as your shield, discipline as your blade, observation as your guide, and honor as your foundation. This is why the Japanese traders were feared. This is why their system survived for centuries. And this is why those who learn it today call it God level. Because once you align with this code, you no longer trade the market. You trade yourself. And that's when the market begins to bend in your favor. Most traders step into the market with hope in their hearts and fire in their eyes. They believe they've cracked the code, downloaded the right indicator, or found the secret YouTube strategy. But within weeks, the truth hits. Losses pile up, accounts shrink, confidence shatters. Why does this happen? Because the market isn't just numbers, it's a mirror. And that mirror reflects every weakness you carry inside you. Fear makes you sell too soon. Greed makes you hold too long. Ego makes you ignore warning signs. The reason most traders lose isn't lack of knowledge. It's lack of control over themselves. This is where Japanese psychology flips the game. Instead of treating the market as a casino, they treated it as a battlefield of the mind. To them, the enemy was not the chart, not the broker, not even other traders. It was the self. If you cannot defeat your own impulses, you will never win. That's why their discipline was absolute. They didn't celebrate every win, and they didn't cry over every loss. They stayed balanced, detached, observing rather than reacting. This neutrality gave them an edge that no indicator could provide. While the crowd fought waves of emotion, they surfed them with calm precision. Fear is the first enemy every trader faces. The fear of losing money, the fear of missing out, the fear of being wrong. It creeps into your decision-making, making you exit early or hesitate to enter at all. The Japanese code destroyed fear by reframing it. Instead of seeing a losing trade as failure, they saw it as part of the process. Losses were not enemies, they were tuition. Every small, controlled loss was training. And once you embrace that mindset, fear loses its grip. You stop being scared of the market because you no longer fear being wrong. Then comes greed, the most seductive trap. A trade goes in your favor, and suddenly, you want more. You ignore your plan, hoping the move never ends. But greed blinds. It turns profit into loss in seconds. Japanese psychology countered greed with honor. A samurai did not overreach. He struck, then stepped back with discipline. In trading, this meant taking profit where planned and refusing to chase more. Honor above greed. The moment you protect discipline over desire, you step out of the cycle that destroys most traders. And then there's ego, the silent killer. Ego makes you double down on a losing trade because you can't admit you're wrong. Ego makes you fight the market instead of reading it. Ego makes you take reckless risks just to prove a point. But the code eliminated ego with observation. When you see the chart not as a challenge, but as a reflection of collective psychology, there's nothing to fight. You're not battling the market, you're aligning with it. Ego dissolves because the focus shifts from, I must be right, to what is the market telling me? That shift alone can save years of frustration. What makes this code God level is how it transforms the trader from victim to master. Most traders are tossed around like leaves in the wind, reacting to news, chasing green candles, panicking at red ones. The Japanese code teaches you to become the wind itself. You stop reacting to moves and start anticipating them. You stop being tricked by noise and start hearing the rhythm underneath. With patience, discipline, and observation, you detach from the chaos. You become untouchable, not because you never lose, but because losses no longer control you. This is the heart of the psychology behind the secret. Trading is not about predicting the future. It's about controlling yourself in the present. The reason most fail is not because the market is unbeatable, but because they are undisciplined. The reason the Japanese masters were feared is not because they had supernatural insight, but because they mastered what others ignored, their own psychology. Fear, greed, ego, these destroy most traders. But when you carry patience as your shield, discipline as your blade, and observation as your guide, those enemies cannot touch you. That is why the Japanese code has survived through time. That is why it is still whispered about today. The phrase, Never loses sounds like a fantasy until you define it correctly. It does not mean every trade is green. It means your process is built so losses are controlled, recoverable, and used to compound edge rather than destroy it. The strategy that never loses is a protocol, not a prediction. It's built on 4 pillars. Map the battlefield context. Wait for the enemy to overextend, liquidity plus pattern. Strike with precision, entry plus risk, and protect the fortress, management plus review. Your armor is risk management, position sizing, predefined stops, daily loss limits, and hard no-trade conditions. Your weapon is patience. You wait for only the highest probability alignments, context, level, and confirmation, then execute without hesitation. The Japanese essence under all of this is simple: honor greed, discipline impulse, observation opinion. When you accept that your job is not to predict, but to filter, you stop fighting the market and start harvesting the few clean moments it gives you each day. Step 1 is context. Map the battlefield before you pick up the sword. Choose 1 or 2 instruments you understand, e.g., a single index, 1 FX pair, or a liquid stock, and 1 primary time frame to trade, e.g., 5, 15M intraday, or 1, 4H swing. But always begin by reading higher time frame structure, for H/D for intraday traders, W/D for swing. Mark the obvious: prior day/week high and low, recent swing high/low, the most tested support/resistance zones, round numbers that attract liquidity, and a session open and initial range. This is where price is likely to trap, reverse, or accelerate. If the higher time frame is trending, your default bias is with that trend until structure clearly shifts. If it's range-bound, you expect mean reversion from the edges back to the middle. Do not skip this map. A setup without context is a coin toss. A setup at a meaningful level with bias is a filtered bet. Write 1 sentence before the session: bias up/down/range because ____, key levels ____. Only take longs above X and shorts below Y. That single sentence keeps you from impulsive, directionless trading. Step 2 is the trap. Wait for liquidity to be taken. The market loves to run stops above a prior high or below a prior low before revealing the true move. This is your first green light, a sweep. You don't guess the sweep, you let price take it. Once price pushes through a prior high/low and then fails to continue, you have evidence that the dominant side may be exhausted. You are not trading the sweep alone. You are pairing it with candlestick confirmation at your pre-marked level. The code is level first, sweep second, confirmation third. Without the level, the sweep is noise. Without the sweep, the level is crowded. Without confirmation, the entry is premature. This triad creates a clean, repeatable filter that cuts most bad trades. It also naturally enforces patience. Many sessions won't give you all 3. That's fine. No setup is a setup. Step 3 is confirmation. Read the candles like psychology, not decoration. You want specific price action that signals rejection or continuation. 4 reversals after a sweep at a level. A hammer, long lower shadow, small real body near the top. Buyers absorb and reclaim. A bullish engulfing, current candle closes above the prior real body's high, swallowing it. Demand overwhelms supply, or a morning star sequence, strong down candle, small indecisive candle, strong up candle reclaiming at least half of the first. For shorts, after an upsweep, a shooting star, long upper shadow, small body near the low, bearish engulfing, or evening star. For continuation after a pullback in trend at a level, inside bar, harami, breakout with close in trend direction, or a brief doji pause followed by a decisive Mariposa-type candle closing away from the level. Rules make it real. A hammer's lower wick should be at least 2 times the body and close in the top third. An engulfing candle should close beyond the prior body, not merely intrabar. A star pattern is stronger if it forms exactly where you mapped prior high/low, session open, range edge. If you can't describe the candle psychology in 1 sentence, buyers absorb the sell-off and reclaim the level. Skip it. Step 4 is entry plus stop. Strike with precision and protect the blade. 2 clean entry modes: close confirmation and retest. Close confirmation. You enter at or just after the confirming candle closes, accepting slightly worse price for more certainty. Retest. You wait for price to pull back to the confirming candle's body or the level and show a smaller confirming micro candle, mini hammer / inside bar, before entry. Stops are structural, not emotional. For longs, below the swing low or below the hammer's wick with a small buffer. For shorts, above the swing high or the shooting star's wick with a buffer. Risk: a fixed fraction of equity per idea, 0.25% to 1% typical. Many pros sit at 0.5%. That means position size adapts to stop distance. Your dollar risk stays constant. If the stop is too wide for your risk budget, reduce size or pass. Have a time stop. If price goes nowhere within end candles, e.g. 5 to 8 on your trading time frame, and sits around your entry, consider cutting early or half, because good trades usually behave quickly. One more rule of honor: never move a stop farther. Moving to reduce risk is allowed. Expanding risk is not. Step 5 is targets plus management. Let winners breathe, cage losers fast. Use 2 targets plus a potential runner. First target equals 1R, your initial risk. When hit, take 50% off and move the stop on the remainder to break even, or just beyond a fresh higher low / lower high. Second target equals the next mapped level, prior swing, opposing range edge, or measured move, 2R, 3R. If momentum rips through target 2, trail beneath / above the most recent swing structure and allow a runner to seek the next level. If price returns to break even after 1R partial, you exit flat on the remainder. That's discipline, not a missed opportunity. If price nearly reaches target, then prints a strong opposite engulfing. Consider taking what the market gives you. Add session guardrails. Max 2 to 3 trades / day. Max daily drawdown 2R, 3R. When reached, stop. This saves careers and no revenge trades after a loss. Your objective is distribution of outcomes. Many small scratches in -1 are losers. Frequent +1 are partials. Regular +2 are 3 are completes, and the occasional extended runner. That distribution is the math behind never loses. Step 6 is realistic examples. How it looks on an actual chart without cherry-pick fantasy. Example long. Higher time frame shows range. Your key level is the prior day's low aligning with a well-tested support. Price opens weak and sweeps below that low. The next candle prints a hammer with a long lower wick closing back above the level. You wait for one more candle. It breaks the hammer high and closes strong, bullish, engulfing relative to the hammer's body. Entry is at the close or on a small retest into the hammer body. Stop goes just below the hammer wick. First target is 1R. You take half and move stop to break even. Price pulls back shallowly, forms a tiny inside bar above the level continuation, then expands up to the mid-range. Your mapped second target near 2 are 2.5R, where you exit most. A runner remains. When a sharp shooting star forms into mid-range and the next candle engulfs down, you exit the runner. Net result: partial at 1R, core at 2.3R, runner modest, clean, repeatable, no heroics. Example short. Higher time frame downtrend. You've marked prior day's high and a round number above it. Price grinds up during the session, pokes above the prior high and round number, then closes weak as a shooting star at your level. Next candle is a bearish engulfing that closes below the star's body. You enter on the close or retest into the star body. Stop above the wick. First target 1 are triggers quickly. You go to break even and scale. Price dumps to the session open, a mapped level. At 2R, you take the majority and trail the rest over lower highs until a bullish engulfing appears. Exit the runner. The loser example, because reality you take a long after a clean hammer at support, but follow through is weak. 5 candles later it stalls, prints a bearish engulfing, and tags your stop 4-1R. No add, no widen. You log it, protect capital, and move on. The next day plus setup will repay it. That is the point. Step 7 is armor and weapon. The rules that make this never loses in practice. Armor rules: risk per trade capped, total daily loss capped, no adding to losers, no new trades immediately after a stop out, take a 5-minute reset, no trades outside your session or at liquidity thin times, no overexposure, not more than one position highly correlated to another, and a weekly rule: if down more than 5 on the week, shrink size by half until recovered. Weapon rules: patience predefine A+ only criteria. Must have context alignment and level and sweep and candle confirmation. If anyone is missing, you don't trade. Minimum wait after open to avoid noise, e.g., first 15 to 30 minutes intraday. Maximum number of trades per zone, 1 shot per level. If stopped, that level is spent unless a fresh, stronger setup forms hours later. Journal after each session in 3 lines. What was the bias? Which levels were respected? Did I follow rules? The code is not just entries and exits, it's conduct. When conduct is consistent, outcomes become statistically consistent. Small, contain losses, modest wins frequent. Large wins appear often enough to carry the curve. That is why this strategy is called the one that never loses, because the trader wearing armor and wielding patience cannot be broken by the randomness between edges. Losses become costs, the edge harvests the rest. Honor over greed, discipline over impulse, observation over opinion. That is how you trade like a samurai, and let the market do the heavy lifting. Every trader starts the same way, excited, hungry, dreaming of freedom. But without discipline, that hunger turns into chaos. Accounts get blown, confidence cracks, and what once felt like opportunity becomes a battlefield of losses. This is the cycle most never escape. But for the few who adopt the Japanese code, something remarkable happens. Their relationship with the market changes forever. At first, the shift feels strange. The trader who once chased every candle suddenly learns to wait. Silence replaces panic. Stillness replaces desperation. He no longer needs to trade every day because he understands that patience is not weakness, it is a weapon. Each decision is sharper, each move deliberate, like a samurai choosing the perfect strike. And slowly, the chaos fades into clarity. One trader I knew used to lose constantly, not because he lacked knowledge, but because he couldn't control himself. Fear drove him out of winners. Greed kept him in losers. Ego blinded him to signals. But when he embraced the code, he began to see differently. He treated every trade as training, every candle as a lesson. Within months, his results transformed, not because the market changed, but because he did. Another story comes from a group of traders who practiced this philosophy together. They stopped competing, stopped chasing signals, and started focusing on discipline and observation. Their equity curves no longer looked like wild roller coasters. Instead, they became steady climbs, slow, consistent, almost boring. But boring was the point. That boring, discipline built wealth that reckless excitement never could. This transformation isn't just about profits. It's about identity. You stop seeing yourself as a gambler hoping to win, and you start seeing yourself as a strategist choosing battles. You stop fearing the market because losses no longer scare you. You stop worshiping wins because you know they are just part of the process. You trade not for the thrill, but for mastery. And that shift spills into life itself. Patience, clarity, discipline. The climax is simple. When you embody the code, you no longer ask, will I win this trade? Instead, I cannot lose as long as I remain disciplined. Because even when a trade goes against you, you're still winning. The lesson, the control, the consistency. This is the secret few ever understand. The strategy doesn't never lose because every trade is green. It never loses because you stop being defeated by fear, greed, or ego. And that is why the whispers endure. That is why Japanese traders were feared. That is why this code is called the strategy that never loses. Not because the market bends to you, but because you master yourself. And once you reach that level, nothing, not a chart, not a crash, not even the chaos of the world, can take that edge away. This is why it never loses. The whispers began with a legend, a forbidden Japanese code, a discipline forged in silence, passed from samurai to trader, from candle to chart. You've now seen its layers: patience as a weapon, discipline as a shield, psychology as the battlefield. The secret that terrified opponents wasn't a mystical formula. It was a mindset sharper than any blade. From the rice markets of Japan to the glowing screens of today, the same truth remains. Most traders lose not because the market is unbeatable, but because they are undisciplined. They fall to fear. They chase greed. They drown in ego. Yet the Japanese masters rose above, not by fighting harder, but by fighting smarter. They treated the chart not as chaos, but as a code to be read. This is the lesson of the strategy that never loses. Victory doesn't come from avoiding losses, but from never being broken by them. Every candle tells a story. Every trade is a test. And the trader who learns to observe with clarity, to strike with patience, to detach with discipline, that trader becomes untouchable. But knowing the code isn't enough. You must live it. You must carry it into every decision, every entry, every exit. To rise as a samurai of trading is to commit fully. No shortcuts, no excuses. The market doesn't reward noise. It rewards silence. It rewards those who wait, those who observe, those who honor the process above the profit. The question now is simple. Will you remain like the crowd, trapped in fear and greed? Or will you step into the ranks of the disciplined, the patient, the ones who see beyond the chaos? The code is in your hands, but only you decide whether you wield it. This is your call to action. Rise as the samurai of trading. Walk into the market not as a gambler, but as a strategist. Not chasing, not reacting, but mastering. Let patience become your weapon, risk management your armor, and discipline your code. Do this, and you will see the market as it truly is, not an enemy, but a mirror of yourself. And remember this final truth: the whispers still echo. Traders still search for the code, blind to the fact that it has always been hidden in plain sight. The only question that remains is, will you have the discipline to see it?